Hi guys, I'm Nicola Mackenzie, founder at Dun & McCarthy Mortgage Services, and in today's video I'll be explaining some of the most common reasons that mortgage applications decline and how you can avoid being in that situation. Now, before we get into the detail of today's video, our team are a team of mortgage specialists and property specialists, so we can help you to find the best mortgage and remortgage deal. That's whether you're buying a new property or reviewing an existing mortgage. Now, we deal with many high street banks and lenders, as well as lots of specialist lenders, and we're here to use our extensive knowledge and expertise to help you to navigate through the options. So head over to our website, dm.mortgage, and book in for a free of charge appointment today. And make sure that you subscribe to the channel if you don't want to miss any more mortgage, finance and property related videos. Now, we help many clients to arrange mortgages, and quite often we're called upon to rectify scenarios where perhaps the client had originally gone directly to a bank or another broker and had their application or agreement in principle declined, and they don't know where to turn to. So this has enabled me to put together some of the most common reasons that mortgage applications decline, and I'll outline them shortly. But the first thing I just want to point out is that if you have been to your bank or building society and you've been turned down for a mortgage application or an agreement in principle, it means that you didn't fit their lending criteria, and that's usually why they decline. Now, your mortgage application is assessed according to that bank's list of requirements, and the point here is that you just didn't tick all of their boxes. So because every bank has their own criteria on who they will and will not accept, if a mortgage application or an agreement in principle for that matter is declined, you need to understand it's not personal and it's not necessarily the end of the road. You just need to find a lender whose criteria that you do meet, and that's what we're here to help you do. Now, some of the issues can surface as early as a point where you get an agreement in principle. Some issues may not surface when you apply right until you make a mortgage application, and that's when you've found a property. Now, our job is to get you the best mortgage deal, but also ensure that your application has the best possible chance of being accepted. And that's one of the reasons why we always advise you to look at the mortgage finance side of things even before you've started viewing properties, to avoid heartache later down the line. Now, if you've had your mortgage application or agreement in principle decline, we can help. If you are fortunate enough to not have had that experience happen to you and you just want to start looking at your options, we can help. Our extensive knowledge and experience means that we're very familiar with every lender's criteria, and therefore we can match you and your personal circumstances to the best lender. But now let's look at more specifically some of the common reasons as to why they decline in the first place. So let's start with affordability. This is one of the common reasons why applications get declined. Now, what you need to understand here is that each lender has their own rules regarding the income that they will include as part of an affordability assessment and what they won't. So for example, if your job includes additional commission payments on top of your salary, your basic salary, or overtime or allowances, some lenders will factor in 50% of those additional payments. Some will take even more than that. Some won't factor in additional payments at all. Now, if your income comes from multiple streams as well, so let's say that you're self-employed or your income simply doesn't fit the norm, then again, we would know which lenders are used to dealing with those situations and which lenders are not. Another example, let's say that you pay child maintenance, then that could mean that for affordability, the lender is likely to overlook the number of dependents you have if you're already paying child maintenance. So the point I'm trying to make here is that affordability calculations and assessment varies across the lenders, and without knowing which lenders best calculate for your situation, you could make a miscalculation. And again, that's what we're here to help you to do. Now, the next common reason that mortgage applications get declined is because quite often someone can have what's called a high debt to income ratio. Now, debt to income ratio is basically the percentage of your earnings that goes towards paying off debts, credit cards, loans, etc. Now, in terms of the amount that this should be, lenders will expect a certain percentage of your income to be going towards a certain amount of debt. Every lender's going to differ as to what they see as acceptable and not acceptable for debt to income ratio, and it's all relative. So for example, if you earn £100,000 a year but you've got £1,000 a month going out towards loans and credit cards, that's not nearly as bad as having an income of only £20,000 where you've got £1,000 going out towards credit cards, loans, etc. The latter example would vastly reduce the affordability compared to if you were earning more income. Now, most lenders are more concerned with the monthly amount that you're paying towards credit cards and loans, as opposed to the overall balance outstanding on credit cards and loans, because the monthly payment is what's directly going to impact on you being able to keep up with that monthly mortgage payment. Again, if you do have outstanding debts though, one of the common things that I see is people just assume I've got debt, it means that I won't be able to get a mortgage, and that's strictly not the case. I want to make that very, very clear. It's all based on the overall picture, your overall profile. So what I would say is if you're someone that has outstanding debt, you need to get in touch and you need an expert to do that assessment to work out if the debt's going to affect you at all in terms of affordability, because it doesn't always, depending on how much you've got. And if it is going to affect you, how it's going to affect you. And we would usually do a comparison to say what it looks like if you repay the debt, what it might look like if you keep the debt, and then only then can you make an informed choice as to what the best way forwards might be. Now, the next common reason why mortgage applications get declined is for those that might be self-employed or contract workers. Now, disclaimer, I'm not saying that if you're self-employed or a contract worker you won't be able to get a mortgage. That's not what I'm saying at all. What the point I'm making here is that every lender will assess self-employed and contract workers very, very differently. So let me give you an example on how it might differ. Some banks might be happy to accept 1 year worth of accounts, some might need 2 years, some might need 3 years. Contract workers might need to say that they've been a contract worker for 12 months, some might expect proof of contract work for 2 years. Some might say that you need at least X amount of months remaining on the contract. Some might ask the current employer to confirm that there's stable work beyond the contract end date. Some banks, if you are self-employed, might take your earnings from the last couple of years and average it out. Some might take the latest year unless profits have dipped. Now, let's say that you're running a limited company. You likely are employed by that limited company. But again, if you earn or own more than 25% of the shareholding, most banks will still consider you as self-employed. So in that scenario, some banks might look at your net profits from the business. Some might prefer to look at the dividends and salary that you've taken and use that as the affordability calculation. Now, whichever way the bank's using to calculate your income, because again, if you're in a limited company, you might not withdraw all of the profits as an income. You might leave some of the profits retained in the business. And depending on how you run your business is really important in dictating which lender you approach for a mortgage. So the point I'm making here is that it doesn't mean that you're at a disadvantage if you're self-employed or contract worker. It just means that it's much more of a complicated situation, and you really, really do need advice to look at which lender is going to accommodate your needs. If you approach a bank that needs 3 years accounts and you've only got one, that's a scenario where your mortgage application would be declined. So it's not that you can't get a mortgage, you just need help navigating through the options. So the next thing we'll look at is if you have a poor credit history. That's a common reason applications can get declined. Now, I want to stress once again that if you have a poor credit history, that does not mean that you cannot get a mortgage. It just means that, again, you might need to navigate through the options a little bit more. So, for example, some lenders don't want their applicants to have any missed payments spanning over a period of years. With some lenders, one missed payment can disproportionately affect you, because some banks just want those that are want for a better word, squeaky clean. That's just the profile and the type of client that they want on their books. Some banks will accept you if you've had a CCJ or a default, some won't. The point is, some banks are happy to take higher risk, some are not. So if you go to a lender that is a low risk lender, then it's likely that you'll get declined if you've got a poor credit history. Even if you've only missed 1 or 2 payments, like I say, that might just be a low risk lender. But if you're in that situation, do not lose hope. It just means, like I said, that that lender is only accepting a certain level of what they perceive as risk. And what I mean by risk is that some lenders take the standpoint that if you've missed a £20 phone bill payment a couple of times, then they're concerned about how you might maintain £1,000 a month mortgage payment. Others might take that higher risk. It might be that they charge a slightly higher rate to accommodate that. Some might not. It really depends on the extent of the credit problems, but it doesn't mean you can't get a mortgage, and you need to speak to us so that we can look at the options with you. Now, if you're not registered to vote at your current address, if you're not on the electoral register, then again, you might have difficulty with some banks in having a successful mortgage application accepted. So the electoral register shows a lender who you are, where you live, and if you're untraceable on the electoral roll or register, same thing, then that lender might have difficulty in conducting a credit search. Now, if you're not on the register to vote, then definitely get yourself onto it as soon as possible. But again, not being registered to vote does not necessarily mean that you cannot get a mortgage. Again, it just might mean that there are some banks willing to consider that situation and some might not be. Mistakes on your credit file is the next common reason that applications get declined. Now, and I've seen this many times in my experience as a mortgage advisor. Mistakes are fairly common. They can be rectified by writing to the particular credit reference agency as where the mistake occurred. Now, the most common 3 credit reference agencies are Equifax, Experian and TransUnion. What you've got to bear in mind is that different lenders use different credit reference agencies, and each credit reference agency may give you a completely different score. So there might be something creating a problem on your Equifax credit report that's not showing up on your Experian one. And again, depending on which lender you might have applied to for that mortgage, depending on the credit reference agency they've used, then that may or may not create problems. So what I will do, guys, in relation to that, if you want to check your credit report, then I'll put links in the description below, because checkmyfile.com is a really good tool to use in terms of they combine all of the information from all 3 of the top agencies, and that might be useful if you need to check your credit file. But depending on the lender, depending on which credit reference agency they use, that can depend on the success of the application. And when you check your credit history, if there are mistakes, rectify them ASAP, because you don't want them to surface at the point when you're making the mortgage application. It can create delays and it can create problems. And just to expand on that and give you a quick example, a client of mine specifically that I dealt with, she had the same initial and surname as a sister that lived at the same address. Her sister happened to have credit related problems. The credit reference agency had pulled her sister's details through as hers, so that made it look as if she had bad credit, when in actual fact it was her sister who lived at the same address. Now, don't get me wrong, it all got rectified. She wrote to the credit reference agency and they fixed it. But again, it was fortunate for this particular person that they had come to us for advice way before they started looking for properties, to give time to rectify these potential issues. And that's just one example of many that I can give you where credit reference mix-ups have occurred. But make sure that you check the file and rectify issues if there are any. So the next common reason that applications decline is when you found a property and you've made a full mortgage application, having property related issues. Now, this can cover a wide range of topics, but again, I'll just give you an idea on some of the more common ones. So if the property gets down valued, then that is potentially a reason for a lender to reject the application. If you've agreed and applied for a mortgage with a bank, then they will conduct a valuation, because they need to be confident that the house you're buying is worth the price that you've agreed to pay for it. In case you default on your payments, they need to have a building there to resell, if you like, to recover the costs. So if you have paid £200,000 for a property and the bank go out and they disagree and think it's only worth £180,000, then there's a £20,000 shortfall, and you would either need to negotiate with the seller for them to bring that price down, or find that extra £20,000 to bridge the gap. And if you cannot achieve one of those 2 things, then your mortgage application would be declined. Now, another common reason for applications to be declined is that if you're buying a property of non-standard construction, so this is where the walls are not made of stone or bricks and mortar and the roof is not made of slate and tile, then typically anything that falls outside of that category is considered non-standard construction. So think quite often ex-local authority properties, anything from that to grand designs that you see on grand designs, those properties can be considered non-standard construction, a thatched roof, for example. Now again, this doesn't mean that you cannot get a mortgage if you're buying a house of non-standard construction. It just means that you have to be extra careful in terms of which lenders will and won't accept that type of construction of a property. And again, that's where we can help you navigate through the options. Once again, another example of property related issues, if you're buying a house next to or above, say, a takeaway shop or a hairdresser, that property might be at higher risk of fire, floods, etc. So again, some lenders don't feel comfortable with that level of risk. So it's not to say that you cannot get a mortgage if you fall under any of those circumstances I've mentioned. It's just that it's going to be more knowledge and expertise needed. That's where we can help. Now, the next common reason that applications can get declined is for visa applicants. Now, again, I'm going to mention if you are on a visa, it does not mean you cannot get a mortgage. What it does mean is that you need some advice. So some banks might accept you only if you're a British citizen or you have indefinite leave to remain. Many will be happy if you're on a visa, but they might want to know how long you've lived and worked in the UK, what type of visa it is, how long's left on that visa. Some might accept you but insist on a higher deposit. Again, they all vary. So the point here is that you need to get advice to again navigate through the options, because if you apply to one bank who doesn't accept your visa situation, that's when you'd find yourself in a scenario where your application gets declined. So another common reason that applications get declined is when you have taken out payday loans. Now, the main reason why a lot of mortgage lenders don't like payday loans is that generally they can suggest that you're maybe irresponsible with money. You're unable to live by your means and manage budgets effectively because you're accepting what usually is an extortionate interest rate because you need to borrow money quickly. Now, I know that's not always the case, but that's how lenders can sometimes view it. Of course, that's not the case. You might have taken out a payday loan because you've fallen ill or an accident has happened to you and you need money quickly. But ultimately, banks, or a lot of banks, don't like it. Now, again, this isn't to say and suggest that if you've had a payday loan, you cannot get a mortgage. It depends how many you've taken, when they were taken, and again, who the lender is as to how problematic that might be in terms of your application. So guys, to summarise, if you are, not obviously wanting to have your mortgage application declined, you want the best chance of it being successful, then my advice is to make sure that you contact us before you start viewing properties. If you are viewing properties, then it doesn't mean that you're too late. It's just that the sooner you have a mortgage appointment and an assessment, the sooner you can avoid potential mistakes happening later down the line. If you're in a position where you have had a mortgage application declined or an agreement in principle, then again, it doesn't mean it's the end of the road for you. Get in touch and we can help you to assess if there might be another bank willing to accept your circumstances. But ultimately, finding the best mortgage is a bit like putting together the pieces of a puzzle. Not meeting one lender's profile doesn't mean that you may not meet the next. Every bank and lender has a different level of risk that they are prepared to take and a different profile of the type of customer that they want to accept. And our knowledge and experience as mortgage advisors will help you to avoid those common problems as much as possible. Now, like I said, we deal with many high street banks, specialist lenders. We have thousands of mortgage products, so we are very familiar with different scenarios from many different people that we help, and we can help you to match your profile to the best lender. Head over to our website and make sure that you book a free of charge appointment, and we can help you to navigate through the options. And of course, make sure that you subscribe to the channel so that you don't miss any more property, mortgage and finance related videos. And I'll see you in the next video.